Hey, good morning, everybody. Bob, Trade Genius, the 2nd of October. I don't know how good a morning is depending on how you're positioned. We're positioned short the market, long gold miners, so we're pretty happy at the moment, but I'm not happy about what's happening. So, as I talked about yesterday, I think Korea was a canary in the coal mine. China's in big trouble. And then, not 2 hours after my video came out, our manufacturing report came out. It was very weak, and that started to sell off in the market. And I want to show you some things for perspective standpoint. So this was the high for 2019, and this is the high for 2018, and this is the high for 2017. We're still slowly unwinding that move. I've been telling people for the last 18 months that we're at stall speed. You don't have to blame anybody. We've been running hard since 2009. They pumped a lot of money into the economy, and it got used up in more debt, and then it went into what I would call you know slow hands. When you're really wealthy, your money gets locked up, so you lose the velocity for the economy, and so eventually it starves itself. Just like somebody who's overweight, and fat is a higher percentage of their body mass. Well, the fat doesn't do anything. It doesn't burn any energy. It's low velocity weight. And the same thing what happens to the economy. So we're at that point now where the debt has to be now discharged, and things can eventually get pretty nasty. The Fed is going to continue to pump money because it's the only thing they know how to do. And when I mean pump money, they're pumping credit. And when they talk about helicopter money is when they actually start pumping currency and not credit into the market. But I think this whole move is going to probably eventually end the Fed, but that's a story for 2 to 3 years down the road. What you're most interested in is where do we go from here? Well, there's a couple thoughts I have right now. So the market, I use the proxy SPX USD because I don't have on this chart I don't have the live feed, but I'll go over to Thinkorswim here in a second. Is that we're at a short term support here, and then if you go over to Thinkorswim, this is the daily. Here's the point of control right here. We just entered the value area. There's kind of a couple philosophies on this. Now that we entered the value area, is that we could hold here at 28.85. All right, or we can run all the way down to the bottom of the value area here at 26.34. But there's some stops along the way. These are incredible. These are volatility channels, and these are incredible reversal areas. That's why I have them up there. I don't usually use them on a daily. I'm usually 5-day, 15-minute chart. But here's support area here at 28.45, and then there's support here at 27.17. So my thesis on a short-term support, though, if you go to the 15-minute, 5-day, is you have right here. You notice it tagged it, okay, and then a slight bounce here. So we could be in a position here where this could be a short-term bottom, where they can bounce it back up to this 29.60 area here, or they can bounce it up to this low volume area here at 29.35. I don't know. I'm just watching at the moment. We're trained to buy the dips, so there might be an effort here to do just that. And so just need to be conscious of that fact that we could be bottoming out for the week right here. So just bear that in mind. And if it fails, then we know we go down another 40 or 50 points. And that's quite possible. I'm going to go out here again. Now I'm going to zoom in on the hourly here. You know, you see my thinking here, because there's the 3 standard deviation of this channel here too, and I think if it tags here, this will be a great reversal area. But you know, we'll just have to wait and see, just play it step at a time. So right now we're short IWM, we're short the Qs with TQQ, well actually SQQQ, I have TQQ puts, which is my preference. And then we're long a couple of the gold miners. And so I'm going to evaluate those, all those today. Typically the day before the employment report, they tried to push gold down, but the world has changed here a little bit. And so I just have to take everything day by day now. You can't really be macro in this market. You know, you have to just look for these reversals. And this happened in 2008, 2009. You know, I kind of called it army trading, you know, down, up, because they would get you leaning the wrong way and just drove people absolutely batshit crazy, and then people capitulated. So I just learned not to get greedy. You hedge, take money off the table, and just be open to the reversals. So that's kind of where we are. I'll do another report maybe during the day. I'm setting up I already have it set up. I just have to now get the software loaded on another PC, and I'm going to try to stream some during the day here, so you guys could see some of these trades in action. And you know, I think it's important to see how the morning trades work out. And this way I can still trade, and I can still stream, and I can still talk to you guys, and I can even answer comments and questions. So anyway, it's going to be really interesting times. And look, we've been warned. This has been the most warned sell-off in American history. If people did not take money off the table over the last 18 months, then they have nobody to blame but themselves. So you guys have a good one. I'll catch you later. Bye-bye.